Welcome back. You're watching Big Deal, and we are discussing the entire startup ecosystem and the investment and fundraising environment at the moment, and what are the trends that are really emerging because of this tough period. Gopal, we were really discussing the investment thesis, the valuation dynamics, but the real return aspect, or the real investor's view, is on the returns from their investments. How are the exit options and opportunities coming along? And is that one of the biggest stress points for private equity and investor community right now?
Well, IPOs are the show horse, but M&A is the workhorse of the industry. And even in India now, M&A markets are 3 times the size of IPO markets. So what has really made the Indian venture capital private equity story more real is the emergence of Indian M&A markets. And I expect M&A to definitely pick up. As far as IPOs are concerned, yes. I mean, if you look at Indian public markets, Indian public markets have over 400 unicorns. 95% or more of them are profitable, probably 100%. And if you look at Indian private markets, we have about 100 unicorns. I would say 95% of them are unprofitable. So I think in the near term, at least, it's going to be difficult for unprofitable venture capital, private equity-backed companies to think of IPO markets as a route towards liquidity or exit. They'll have to stay private for longer. And this means, and there is mercifully a ton of capital still waiting to be invested in venture capital and private equity. I do expect interest from large private equity venture capital firms for M&A to return. I do expect interest from strategic investors to return. So I think there'll be probably in the short term greater reliance on private equity, venture capital, and M&A markets.
Right. But Gopal, I want to understand, for any of the M&A to happen, there has to be a consensus built on valuations. When is that going to happen in your view from now?
Well, it's only a matter of time. I don't think you can expect. It's difficult for people, especially given the dramatic nature of change. I think A, the change has been very sudden, and B, it has been in scale very dramatic. My sense is that A-list companies, have the luxury of time, but A-list companies don't really spend a lot of time thinking about timing. Eventually, it all works out. Probably, yes, in 2022, there has been this impression that there's some sort of a logjam in the markets. Deals are not getting cleared. There is no convergence. I'm hopeful that in 2023, the deal volumes will pick up.
Is that your view as well, Sasha? And how do you see exit options develop? And your overall view on consolidation, do you think that is likely to pick up in this space?
I agree with Gopal, apologies. I believe that, in our best companies, they're actively looking to buy assets. In fact, we start some board meetings with updates on on M&A. But, nobody wants to sell in tough markets because you obviously get less of a price. So everyone's going to play a dog and pony show. Everyone's going to waiting. But as time passes and the market continues to remain relatively tough, the weaker companies will have no choice. And therefore, the companies that are well-run, A companies, as Gopal said, they just have to be patient. They have enough capital, they're executing really well, whether it be 3 months from now, 6 months from now, lots more M&A will come up, especially when new rounds of capital come up next year and the founders realize they can't raise capital. So they rather than sell and move on. So you'll see lots more M&A happen next year, in my opinion. We are getting lots of opportunities to sell up our companies and our best companies. We have at least 5 companies where private equity / large growth funds are after us to buy our positions. But we are in no way going to sell them because we believe in those companies and we're holding on. But the good news is, if we had to sell, you could sell even tomorrow morning.
Okay. So right now, good companies still have that backing from the investors. But Gopal, help me understand, with the recent, few trends emerging, like big layoffs happening in global and Indian companies in startup space, also the corporate governance issue coming to the fore. What is the kind of sense and the challenges and risk factors that you're anticipating that are really coming up as trends going forward?
Well, there are two parts of this question. One is, expense management, and the other is governance. I think in general, yes, there is an expense management challenge as far as technology is concerned. And this challenge has come to the fore because people were expecting much higher growth, and people were expecting capital to remain cheap for a long period of time. So over the last 2 or 3 years, technology companies have built up expenses far ahead of demand. And generally, there's this impression now that technology has an expense management side issue. I'm sure good companies will correct in a good way. In India, I think we always generally refrain from layoffs. We are better at cutting salaries than cutting headcount. But my sense is that smart companies will get around to this. Governance is an entirely different issue. Last 3 or 4 years, the pace of value creation has been such that everybody felt that nobody really needed to come to work, whether it is investors or companies, right? People were working from home, and investors thought that coming to board meetings wasn't important. I think this belief, this was a short-term belief, this recent belief that companies can deliver without corporate governance is misplaced. We've seen that from some of the recent disasters. I won't name them, but we've had Lehman-like crisis. We've had large investors invest in companies throwing caution to the wind. So it's going to be, again, going back to an old-fashioned way of running businesses. Adult supervision. Entrepreneurs need adult supervision. The rule of law is important, both in the public and private sector. And within companies, the rule of law is important. And how is the rule of law established? Through effective boardroom management and through investors playing a proactive role. So we'll be back to basics in the venture capital and private equity industry.
So for that, the investors will play a very critical role. And Sasha, from your standpoint, entering a company at a very early stage, mentoring the company, grooming the company, how are you seeing this trend emerging? Are entrepreneurs really, taking this idea well, and are they able to adapt to the changes?
The reality is that most people and most entrepreneurs, I'd say a vast majority, are honest, run their company ethically, and run it the right way. Unfortunately, always going to have a few bad eggs in life. And therefore, I believe that there'll be more DD before people invest in companies. And that's the reality of life. We have to do that because for that 1% or 0.2% of entrepreneurs who have unfortunately soiled the name of entrepreneurship, and there are lots of examples in the last 2-3 weeks itself. I won't mention names. Everyone knows what company they're talking about. It is reality that more diligence will be done, and our investors expect that of us. We're already doing enough, but more will have to be done. But it is reality of life. We have no choice.
All right. And while we are already cautious, Gopal, are you anticipating any more risk factors and challenges going forward? Very quickly.
I don't think COVID is out of the system. I think I worry about accidents. Last 3, 4, 5 years, large public market investors have, on the back of cheap capital, loaded up on private assets. So I worry about accidents. I worry about, and this could unsettle markets, again, make price discovery difficult, erode value.
Right. All right. So probably the spate of bad news is not over, but then there is a lot of consensus on concept of profitability, corporate governance standards, and also the valuation mismatch will probably find a certain level in the due course of time. Sasha Mirchandani and Gopal Jain, thank you so much for giving your deep insights on how the trend is emerging in this startup ecosystem. Thanks so much for tuning in to all our viewers.